Good afternoon again, everyone. For those of you who've joined us over the past few weeks, welcome back. If you're new to all of this, then welcome. Bonjour et bienvenue. I'm Mark Healy. I'm the Executive Director of the Ivey Academy. That's the Learning and Development wing of Ivey Business School here in London. The Academy is the only full-service, university-based learning and development house in Canada. Our purpose is simple: to help transform the Canadian economy, to advance Canadian competitiveness. The world needs better leaders and Canada needs better leaders. That's the business that we're in. We've been impacted like others recently. We're rebooting our own business here. We're excited to be launching some new virtual programs, really purpose-built for the COVID era. So look for some announcements on that in the next week or so. We do see some green shoots now and actually some taller plants. More and more of our custom clients have worked through their scenario and recovery planning. They're deciding to get on with things. This is encouraging for us, obviously, but I think actually more so for the Canadian economy and recovery, and frankly for society. So if you marry that with kind of ongoing governmental decisions we're all reading about, reopening, consumer sentiment, which I believe is up each of the last 6 weeks, we have some real reasons for optimism. And speaking of scenarios and recovery and what all this means for Canada, we're absolutely delighted to be joined by two experts who've delved deeply into the shape of recovery, implications on the Canadian economy, on international relations and trade relations and geopolitics. That's Craig Alexander and Pierre Pettigrew from Deloitte. Craig Alexander is the first chief economist at Deloitte Canada. Craig has over 20 years of experience in the private sector as a senior executive and leading economist in applied economics and forecasting. Previously held positions as SVP and chief economist at TD Bank Financial Group, SVP and chief economist at the Conference Board of Canada, and vice president economic analysis at CD Howe. He has a strong background in macroeconomics and financial forecasting. Craig is a passionate public speaker. He's across the United States and Canada discussing financial and policy issues facing the countries as well as evaluations of their economies. Craig holds a graduate degree in economics from U of T. And we have Pierre Pettigrew with us. The Honourable Pierre Pettigrew is Executive Advisor International at Deloitte Canada. He's the chair of the board for the Asia Pacific Foundation of Canada. He's also the Government of Canada Special Envoy for the Canada-European Union Trade Agreement. Pierre has had success in both public and private sectors. While a consultant at Deloitte Montreal from 85 to 95, he emerged as a strong voice for business on international trade issues, unity matters that brought him to an appointment in the federal cabinet in the 90s. Pierre served as a minister for 10 years, most notably as Minister of Human Resource Development, Minister of International Trade, and Foreign Minister. Pierre sits on a number of nonprofit and profit and for-profit boards. He's a member of the Inter-American Dialogue in Washington. Pierre arbitrated a number of international trade disputes between countries at the World Trade Organization. That's the WTO in Geneva. So, as always, I'm going to moderate and direct traffic a bit. We also have our executive producer, that's Sean Ackland-Grant, with us. Sean's going to be our tech lead. He'll keep track of and curate some questions in the chat and the Q&A. Today, we're going to hold those for the end. Sean, just a few brief words from you, please, on all that.
Sure, thanks, Mark. So if you've joined us before, we encourage audience questions. You can submit your questions by double-clicking the Q&A icon in the bottom of your Zoom window. That will pull open a new panel where you can submit as many questions as you like. You can also use the thumbs up icon to upvote other questions you like. So we'll curate those throughout, and as Mark mentioned, try to get to as many of those as we can.
Okay, great, fantastic. Thanks, Sean. Craig, so you're up first with us. Thanks again for joining us, and just wondered if you could kind of set the stage for us with a bit of a macro view. Where are we on shape of recovery and impact on the Canadian economy?
Sure. Before I start, though, let me just say it's a pleasure to do a webinar for Ivey. I actually have an undergraduate degree from the University of Western Ontario, and it's where I met my wife. So Western is near and dear to my heart, and I'm very pleased to be doing something for Ivey today. I'll spend maybe 15 minutes giving you sort of the overarching view of the economy, talk about where we might be going, what are the big economic issues and trends that are related to the environment we're in, talk a little bit about legacies. Obviously, I'm going to be short on a lot of these things because there's so much to talk about, but I do look forward to the Q&A, so I hope participants will think about questions that we can talk about after Pierre has done his presentation. So if we think about the global economy, the IMF is currently projecting that the world economy is going to contract by at least 3% this year. To give you an idea of the magnitude, this is the biggest economic contraction since the demobilization after the Second World War, and the only time we've seen a contraction of magnitudes like this outside of that military demobilization was the Great Depression. To compare it to 2008, 2009, the world economy contracted by 0.7%. So it is clear that this economic contraction is going to be orders of magnitude greater than what we had in 0809, which at the time we dubbed the Great Recession. When we think about the economic data that has been coming in, one of the challenges we have is economic data is inherently lagged. StatsCan does surveys and then reports the findings on how the economy is doing, and typically they report 1 to 2 months after the reference month. So one of the challenges we have is that the economy had such a precipitous fall as the economic lockdown was imposed. I think from a Canadian point of view, we also need to be mindful that we're not only dealing with the fallout of the pandemic, but we're also dealing with an enormous energy shock that is hitting the Canadian energy sector. And this is one of the reasons why the Canadian economy will likely underperform the United States this year. The North American economy is going to go through a painful downturn, but Canada will have the added impact of the energy shock. One of the lessons that we're getting from the global economy is that countries that were first into the crisis are also tending to be the first ones out. So Deloitte has a network of chief economists around the globe. We have 13 chief economists. One of them is located in Beijing. So when I have questions about what's happening in China, I can reach out to Sitao and find out what he's hearing from clients. So I don't have to rely on sort of official government statistics. I can get a pulse for how the economy is doing. And there's no question that the Chinese economy is growing. It's probably growing at around 3%, which is around half of what we would consider to be a healthy pace of growth. So, China is still struggling, but growth has reemerged. In Europe, they started the reopening sooner than we did in North America. And then, North America went in a bit later, and it's going to come out a little later. Because of the lagged nature of the economic data, most of the data is still telling us how far the economy has fallen. We know the Canadian economy contracted at an annualized rate of around 8% in the first quarter, and we're currently tracking a close to 40% annualized decline in the second quarter. So this is an unprecedented contraction. But it also isn't surprising. I mean, the economic numbers are extraordinarily negative, but in a sense, everything here has been happening so fast that that's really history, right? So what nobody cares about, March and April when we're in June and provinces are announcing the reopening. So in real time, what we're seeing is that economic growth is coming back. And the last data point that we had on employment for the month of May for both Canada and the United States was signaling that. Market was expecting 500,000 jobs to be lost in Canada. In point of fact, 289,000 were created. So there's no question that in the second part of the second quarter, growth is reemerging and a recovery has started. And I expect to see a very significant percentage increase in the third quarter. Now, the one thing I would be very careful about when you interpret economic numbers here is that the percentage gains could look extraordinarily positive, but we need to be mindful of what's happened to the volume of economic activity. So just to use an analogy, imagine you have an auto dealership that sells 100 cars a month. Now imagine during the lockdown, they could only sell online and they sold 20 cars. As we reopen the economy, the dealer room will be reopened, but the virus is still in circulation. The health risks are still there. So what that means is we're going to have to maintain physical distancing. There's going to be limits to how many people can be in the showroom. You're going to have to clean the showroom after people have been in it. And when you take that into account, maybe sales go from 20 units to 40. And StatsCan will tell you there was a 100% increase in sales. The problem, though, is the volume of activity is still very low. The volume is only at 40 units. And I think that's really the message here. This is going to be I think the base case forecast is for a long, gradual recovery, because we're only going to be able to open the economy incrementally over time. We aren't going to go immediately back. We aren't immediately going to go back to normal. And so this is going to shape the recovery. Now, we do know that there's a lot of uncertainty here. One of my core recommendations to any business is that you need to think about scenarios. I have a base case which we're using to track and update after every economic release. But we also have scenarios which are one where things are more optimistic and you get a more V-shaped recovery. That increasingly looks less likely given the gradual reopening of the economy and the health risks that are still present. We have scenarios that are more negative. The big risk here is that we get a second round of infection. It's quite possible that you could have a second round start in October or November. This flu season raises risks. And of course, the big concern would be if health numbers get up to, health infection rates get up to a point where you have to go into a renewed lockdown. And if you had that, you would have a very U-shaped recovery. In other words, the economy remains very weak until we really have a vaccine and it's deployed. And then you can think of other scenarios that are more negative. What governments are really trying to do is avoid a depression. As I said, when you have a 40% annualized contraction in your economy, that's the sort of thing you see in depressions. The reason why I firmly believe we will not have a recession is that the government and the central bank stimulus that's been deployed, which has been remarkable and very fast. Like, we can be critical around the design of some of the policies, but we need to be pragmatic and realistic about the fact that policymakers have been trying to respond at speeds that they are not they are not comfortable with, and it's hard to get the policy perfectly right. So we could do a lot of armchair quarterbacking here and make observations around the design of programs, but the most important thing is that governments are doing everything they can to avoid a depression and reduce the risk of deflation. So the shape that often gets characterized for a depression is an L, and I don't think we're going to get that. My base case actually looks like a Nike swoosh symbol. I don't know how Nike would feel about their brand being used that way, but it's a good metaphor, right? A very sharp decline followed by a very gradual and extended recovery. And I still think that is the most likely path. One of the things, though, when we think about businesses, and when I'm thinking about the economic outlook and I do projections for individual industries and sectors, is I think about all of the different trends that are shaping the Canadian economy. And one of the key trends, so I could bucket these into three categories. Category one are trends that were in place before COVID-19 that are still in place today. So great examples are aging demographics, right? Canadians are still getting older. Older workers are going to be leaving the labor market. You might think that the current environment of COVID might impact their spending behavior. It could impact their saving behavior given what's happened to asset markets. So it could have impacts. With aging population, we are still reliant on immigration, but how willing are immigrants going to come when the health risks are elevated? This could have an impact in terms of labor skill shortages for some industries. These trends, demographic changes, they're just with us. Another example here is government efforts to move towards climate change, right, or address climate change, right, greening of the economy. And in fact, I'd argue COVID and the policy response actually creates opportunities for the governments to move the ball even further along in terms of greening the economy. Then there are trends that not only were present before COVID, but have been drastically accelerated. So number one, before the crisis, the number one concern was high household debt. Well, post-lockdown, we are going to have more indebted consumers, significantly more indebted businesses because many are being kept afloat on credit, and dramatically more indebted governments, right? And so a very fundamental question is, in terms of the shape of the economic recovery, how are we going to grow with the amount of leverage that's been accumulated in the system? I think this is, I don't think it'll stop a recovery, but it could temper the recovery. There was a trend taking place of a shift towards digital. Well, this has been drastically accelerated in the current environment. I was talking with one of the major grocery chains companies, a week ago, and they said, well, they always knew that they were going to have to shift to more digital e-grocery and online grocery sales, and they had a plan as to how they were going to figure it out, and they had a map of where they wanted to be 5 years from now. right? So they knew where they wanted to be 5 years down the road. They did it in 3 weeks, right? Because they absolutely had to respond to this environment. And once you've actually figured out how to do things digitally, you're not going to go back. The shift to digital, plays also into the changing nature of work. Like what we're seeing is more remote work. Businesses that were not designed or had even prepared for a remote workforce are having to do it today. And the fact is that once that genie's out of the bottle, you're not going to go back. You're going to have workers that want to continue to work remotely, and you're going to have businesses that are going to say, you know what, I can save a lot on real estate costs by continuing to have workers work more remotely. So when we go through the recovery, the post-lockdown period, particularly when the virus is still in circulation, I don't think we're going to return to like work as normal. One of the things I think about it for example, for Deloitte, is during the period that the virus is still in circulation, if you can only have 3 people in an elevator at a time, there's no way we can actually get our people into our office towers downtown, right? But even after we have a vaccine, I think the shift to more remote and flexible work will stay in place. There's also there's also been a push towards increased automation. Manufacturers that need to have workers have more physical distance between them, are thinking about, okay, can I use machinery and equipment to replace, one of the 2 jobs that workers were doing in order to mitigate health risks. So you're getting more automation, you're getting more use of AI and big data, and it's been accelerated by this environment. And then the last set of emerging trends, so you have trends that were already with us that are still with us, you have trends that have been accelerated, and then you do have, trends or legacies that we only have because of the pandemic. One of them is highly disrupted supply chains. Like many businesses never anticipated or really thought about their supply chains and how they could be disrupted by events like this. And it's causing clients that I speak to think about, what is the future of their supply chain going to look like, right? Do they need to build in redundancy? Do they need a strategy as to how they're going to shift suppliers if if they get all their products, their inputs from Asia, and Asia has a renewed lockdown, what can you do, right? Like, how are you going to shift your supply chains? There's also a very fundamental issue around the change in consumer behavior. What we can see post lockdown in China, in Europe, is that consumers are not behaving like they did pre-COVID. What we're seeing is foot traffic in retail outlets is significantly below what it was pre-COVID. You're seeing, basically consumers are still reluctant to make as many trips to stores. They don't want to touch products on shelves. They're making fewer trips, but they're buying more per trip. But in aggregate, they're actually not spending as much. And these are things that could have a very profound impact on Canadian businesses, because if you're dependent on a bricks and mortar sort of outlet, you are vulnerable here. Whereas businesses that actually had more capability to deliver e-commerce or had already built good platforms, they are more resilient in this environment. Then there is very big political risks that are present, which we need to be mindful of, right? One of the examples is governments around the world have realized now that you really need to produce certain essential products domestically, right? And the key example here is medical products. The question I have, though, is while that makes sense to have industrial sovereignty in manufacturing essential products, my question is, from a political point of view, what will politicians deem to be essential? Right? If it's just medical equipment, it's okay. If you start broadening it out to more and more and more industries, this can actually lead to protectionism. It can lead to deglobalization. We're also seeing a dramatic change in the role of government. The government is involved much more in making decisions for businesses. And in some cases, some of the things that government do, businesses are now having to think about, right? So there is enormous political risk. So again, given all of these trends, what I do is I think about different scenarios and how they will play out and what the future might look like, because we're not going to be able to predict the outcome of all these trends with precision, but we can certainly run scenarios to figure out picture a tree diagram. What you know is there's a whole variety of potential outcomes, and what you're trying to figure out is which branch of the tree are you traveling down. And businesses and governments need to think about how they manage that uncertainty, and how they also manage the range of outcomes that can actually take place. So, bottom line for me, the good news is the tide is turning, right? If we don't get a second round of infection, we don't get a second lockdown, I think you're ultimately going to see that a recovery, if anything, has perhaps started now. But understand that this has been a tectonic event. It will have some very long-lasting legacies. It will shape. There's a lot of trends and legacies that will shape the recovery. But the good news is the tide has in fact turned. Now, I'm going to stop there. I know I did this very fast, and I know I did this at a very high level, but I hope this will provoke some good Q&A. And as I said, the political risk here is enormously significant, and it's really hard for economists to factor political risks in. And that's why I'm thrilled to partner with Pierre Pettigrew on today's webinar, because I don't have to answer the question of what politics will do. I leave it up to him.
Thank you very much. Thank you, Craig. Yes, I'd like to pick up the ball here and look at these political risks. And thank you, Mark, for your hospitality on this Ivey webinar today. I'm also very pleased to join Craig and participate in it. And I will focus on the politics of it. The seismic events like the one we are going through with COVID right now reorder international relations. And international relations have begun to reorganize themselves during this COVID crisis. And I will focus on trade because that's what I've been asked to do, to focus and look into the trade relations that are absolutely important and crucial for the Canadian economy. But one major factor that I see, first of all, I think that COVID will, as a matter of fact, accentuate, accelerate, deepen some of the trends that we've already been witnessing in the past few years around the challenges to globalization that we have been seeing in the last few years. One element of that challenge to globalization, which really essentially focused on multilateralism and market. We've been, for the past 50 years, organizing our lives, we can say from the Thatcher-Reagan era, on shrinking the role of the government, shrinking the role of state, and going through the Washington Consensus to liberalize, privatize, deregulate, concentrating on markets to allocate resources better. And when there was a problem between markets around trade, protectionism, or whatever, we would go to the WTO. The rule of law and multilateralism was going to settle this. This is a world that was already being challenged by the United States in particular, but some other countries as well. And clearly, the rivalry between China and the United States is taking a totally different turn because of the COVID. You will remember, it now looks like ages ago, that in January, Trump and Xi signed a phase one trade agreement. A phase one trade agreement between China and the United States, which essentially gave the US nothing of the demands it had had over the past 2 or 3 years, but in which the United States was demanding China to buy $18 billion of soybeans from this and that state, which are politically important for the president's reelection. It didn't address any of the substantial issue. It was strictly managed trade, but essentially Trump bought a truce with China towards his reelection bid in November. That even cost him very nice things he said throughout the month of February of how China was a wonderful country, and President Xi is a transparent man, and all things that he deeply regrets now. But you could tell that from a truce he wanted with China, it has now turned not only between trade tension that we have known between China and the United States, but we are now seeing it turning into more than a rivalry, but a real confrontation where way beyond trade. Now the US administration is trying to get China responsible for the whole thing and finger pointing at them, whereas the Trump administration was simply asleep at the switch throughout February, not reading the signals because it was so much keen on his trade truce. So this is the reality on which we are, but it is going to affect Canada in a very significant way. So now from that geopolitical reality, and I'll speak a bit about the European Union now dominated by the Franco-German couple, as we've seen with the huge package that the Germans finally accepted vis-a-vis the south of Europe. That's changing things a great deal. But let's come back to the role of the government. Craig set it up very well. Governments in crisis play a very big role. We've seen during the financial crisis in 08, 09, the government buyout of the financial institutions and system helped a great deal. And now during the sanitary crisis, you've seen the governments really coming to the rescue of workers and citizens and companies and being all over the place. Well, normally when governments come in, they don't leave so easily. Both because they like it. It's nice to be busy when you're in the government and you like to expand your role. During the First World War, they created the personal income tax. Well, it was for the war, but never disappeared. So you can tell that the citizens will be expecting the governments to play a larger role in society. First, the huge debt that they will have to pay down will impose for them to stay present in our lives. But there's a lot more than that. There are the global supply chains that have been weakened, sometimes even threatened, not as badly as one could have thought. At the beginning, I was very afraid that the food supply chains would collapse. They have not. It's been pretty miraculous. The Chinese have worked very hard at salvaging these supply chains, and Asians worked very hard at making sure we in the West and the rich world would not lack too much product because they depend on these supply chains and don't want them to be too challenged. But citizens were flabbergasted to realize how dependent we'd become for pharmaceutical on the Chinese. I mean, 90% of the penicillin we use in Canada is fabricated in China. Not comfortable. I mean, 100% in Canada, actually 90% around the world. So I think the governments will play a much larger role. Will it be compatible with globalization? Not as we've known it, because the Anglo-Saxon market capitalism pretty much limited the role of government a great deal. But my view is that the governments have been invited back to the table in procurement, certainly around health products. Once they're there, there will be pressures from all kinds of industrial groups to also play a role in this and that sort of trade, not only in our country, but in other countries. And you can expect that they will do it right. I think Craig is bang on when the temptation by many governments around the world will be to have demands on the private sector for a greener planet and climate change commitments. You've already seen it. I mean, the French government is ready to help Air France as long as they cut their routes between small routes within France, between cities, and send people to the trains. And Air France has accepted that. So their government will be using a lot of these tools to promote other agenda and so beyond pure procurement. Another place where I see the government playing a much bigger role, and this is due to what I described earlier around the China-USA trade confrontation. hopefully won't turn into a Cold War. I don't think it'll turn into a Cold War personally, because essentially we could do that with the Soviet Union, because the Soviet Union and the United States traded $2 billion a year in 1989, 1990 at the end of the Soviet Union. The United States trade almost $2 billion a day with China, and the Chinese hold a lot of the American debt. So you cannot go into the same kind of Cold War without really damaging the economy that we have built in the last 50 years. And that has helped us all. I mean, it's helped the Chinese a great deal, but it's helped the American economy as well a great deal. But the role of the government is going to play a much bigger role as well, because the WTO is almost disappearing under our eyes. The Director General Acevedo resigned two or 3 weeks ago. It is leaderless now. The United States has not accepted that the dispute settlement body be renewed. So we are in a world where multilateralism is not coming back. I mean, not only Trump did not reduce the role of the WTO, the Chinese are not beefing it up either. Since they joined in Doha, they've not accepted to make any concession to keep the system alive and flourishing as we would need it. But you also see the attitude of the United States toward the World Health Organization. So the whole multilateralism world is collapsing. So you will see the government playing a much bigger role in trade negotiations, because these will no longer be done at the multilateral global level with a lot. I mean, when I was trade minister, I spent so much time with Canadian industry to know exactly what it is that they wanted. Basically, the trade minister was the advocate and the trade negotiator for Canadian industry, who would task us with this and that to get. Now we're entering into a world where there is no longer multilateralism. We're going into a world where the trade negotiations will be done issue by issue, country by country. So on that front, I must say that as a Canadian, I'm quite pleased about our starting point. If you look pre-COVID, we were the only G7 country that has a free trade agreement with every other G7 economy. Through the CPTPP with the Asia Pacific, with the CETA, Canada-European Union Agreement, and with the renewed Canada-United States-Mexico Agreement, we're in top shape in the sense that even if the world moves in a more protectionist direction, which it will, at least we have these plurilateral agreements that set rules that are going to be very helpful for us. The European Union is with the departure of Great Britain, we have not measured how much the European Union would become less liberal, less pro-free trade. Now dominated by the Franco-German, who don't have to think of a British veto on this or on that, you will see European Union becoming very dirigiste, as the French like the economy, and the Germans are very close to that. You could see it last week or 2 weeks ago when the European Commission built a huge package of billions of dollars, where the Germans finally accepted to contribute to that. The 4 other northern economies, smaller countries from Austria, Sweden, and Finland, have lost their leader. Normally, Britain would have put a veto on that. But Britain not being there to put a veto on it, these 4 smaller countries don't have a leader and will lose weight in terms of having a more protectionist European Union. So let me stop here for going into a Q&A. But I do believe that for a country like Canada, who played in multilateralism with the rule of law, where right it was more important than might, it is going to be a far more challenging trade environment. We have a solid basis because of the trade agreements we've had, but by and large, no one is having our back anymore. And we will have to build a lot more coalitions all over the place in terms of our values, but also in terms of our interests. So it will require a far more, I mean, the honest broker negotiating nice things on behalf of the United States, essentially, but being the nice guys around it, is a role that no longer exists in world affairs. So I'll stop here and entertain with Craig your comments and questions.
Fantastic, tremendous insights from both of you. We're as usual overwhelmed with questions, so we'll sort of do our best here. I thought we'd start with stay with government and start with a question there that will actually apply to sort of both of you. So last week I had a good conversation with our colleague here. That's Paul Booth, who spent a fair amount of time in Ottawa and at Queen's Park, and we talked about the idea that right now in government we're kind of writing checks and our eyes are out. But at some point dinner's over and the check comes and the eyes balloon, and now we've got to pay the bill and the eyes sort of turn inward. And so maybe Pierre, if we could start with you on a comment on, do you imagine that the focus necessarily has to return to Canadian affairs at some point? And then Craig, for you, what will the impact of that sort of check coming due do to the shape of recovery?
Yeah, when the check comes in, unfortunately, the government can just go to the washroom and ignore it. It'll have to deal with it. At the same time, the interest rates will probably stay low for quite a while, which will help the government get a break. I think the political debate in Canada around the check coming to us will be around how much to do through tax cuts and, on the more conservative side, and how much to do on the growth agenda. And normally a growth agenda requires further investments on the part of the government. But there will be, the growth agenda is what we had in the 90s. I was in the Chrétien government that really eliminated the deficit and even reimbursed a good part of the debt. But that was mostly done by a growth agenda. We didn't have to raise taxes, just very few of them. So I think that the government has a strong support from the public at this time for maintaining the course. I think people understand that it is the only way to avoid a depression that would be far more drastic. But I'm looking forward to see what Craig will contribute on that.
Sure. So I'm Scottish and an economist, so you can just imagine I'm incredibly cheap and I don't like deficits. But even I would say that this is the time you run deficits. Like, now is not the time to worry about to be honest, even with all the announcements we've had, the fact that the parliamentary budget officer came out and said that the deficit this year could be $252 billion at the federal level. At the end of the day, the thing I would point out, that was only on measures up until up until April 24th. We've had more announcements since, and up to this point, governments have really been dealing with addressing the income shock on workers and the cash flow balance sheet shock on businesses. They're only now starting to consider what are the programs they're going to run that are the more typical fiscal stimulus to basically create a stronger economic recovery. So the fiscal announcements are far from over. The deficit's going to be far greater than the parliamentary budget officer last report. Yeah. But this is exactly why we were running a low debt to GDP ratio beforehand. The whole reason why I gave the current government a hard time about running deficits in good economic times was so that you actually had the capacity to respond to a crisis like this. This is when you spend your fiscal dividend. When we look at the fiscal numbers in Canada, we aren't going to see these deficits lead to a fiscal crisis like we had in the 1990s. And one of the big reasons is the debt to GDP ratio is still not going to peak as high as it was in the 90s, and interest rates are dramatically lower. So governments can, and this is true globally. The low global rate and low interest rate environment is allowing governments to act. But go back to my earlier comments. The reason they're doing it is to prevent a depression, right? So economics tells you this is how you respond to a crisis like this. Now, in terms of the recovery, once we get to the recovery stage, the recovery actually has some good traction. We're making up the ground that we lost. We're getting, close to pre-COVID levels of activity. Governments across Canada are going to want to start thinking about fiscal rebalancing. Yeah. And, you can't raise taxes enough to deal with this because of the magnitude of the deficit. Do I think we're going to end up with higher taxes? Yes, I do. But is it going to solve the problem? No, it's not. Right? You will see governments embarking on expenditure constraints like they do in fiscal rebalancing exercises. But again, that isn't enough. And the thing I'd highlight is it's really around, the way you do this is you tighten up your fiscal situation, you reduce your deficit, your annual deficit, and then you let the economy grow, and that brings down the debt to GDP ratio. England actually, it's a little surprising to know that England was paying for the war against Napoleon still in the 1930s, right? So, you can carry debt on the books for a very long period of time. And yes, I think governments, provincial governments and even the federal government could have credit rating downgrades here, but so are all governments. And that makes a difference, right? If Canada's getting downgraded and no one else is, you now have a fiscal problem. If all of your peer countries are having credit rating downgrades and they're roughly similar, it's not as much of a problem, right? So this is a big issue. I still think it's going to shape the recovery. We know how to grow by taking on more debt and by having government spend more. We actually have a hard time thinking about how to accelerate growth when you need consumers, businesses, and governments to restrain their debt. And that's a fundamental part of the issue. And I think from a policy point of view, governments need to think about things they can do that don't cost money, like major regulatory reform, right? Like if we could put in place regulatory changes that would actually incent economic growth and allow, encourage businesses to scale and help many hard-hit sectors, the regulatory changes could actually allow, unlock additional growth that would help the fiscal rebalancing.
So maybe we use that as a bridge to a couple of questions about the kind of messiness of recovery. So there's kind of a notional idea that the shape of the recovery is actually the sum of many curves, many industry curves or sector curves. And just, wondering if Craig, if you had a comment on that, is the shape of recovery going to be different depending on the sector we're talking about in Canada?
Oh, absolutely. And so is the depth of the recession, right? So, this recession has caused a big contraction in the energy sector, the commodity sector overall, but the energy sector has been hit harder than average. And in particular, it's the oil sector that's been hit the hardest. The economic contraction in that sector is going to be, in my current industry forecast, the energy sector is going to contract close to 3 times what the national average contraction is going to be. So you're going to have an enormous decline in the energy sector. And some of it is in production, but the bulk of it is in investment, right? And then the lower investment means that when you get to the recovery, you're going to have less growth because you haven't been making the core investments, right? So even as that sector recovers, I think it's going to be a smaller share of the overall economy. Heavy manufacturing like autos is getting hit really hard here. But one of the unique characteristics of this downturn is we are seeing services industries hit more than they typically do in normal business cycle recessions, right? So retail, hospitality, food services, accommodation, tourism. These are all sectors that are getting pummeled. And when you think about the economic recovery, you say, okay, well, as we come out of lockdown and the virus is still in circulation, do you actually think activity is going to go back to normal in these areas? And the answer is no, I don't think it will. Like, I think there'll be a recovery, but it's going to be long and drawn out. So, there's some sectors that are more resilient, right? Professional services, financial services, more resilient. Healthcare, public administration is growing, right, during this period. They'll probably actually have their pullback when we get to the recovery side of things. So you are going to get a lot of different dimensions. I did notice that one of the questions was around the shape of the recovery and the possibility of a W. And the answer there is yes, you could. It's all how you characterize it. So if you think about percentages, I honestly think what we're going to see is a sharp percentage increase in activity, and then after that initial jump, the growth rates are going to drop back again. And could they drop back into like a contraction? Yeah, they could. If you look at the level of activity, I think that's where the level makes it look more like a check mark or a solution. Somebody asked where we are in that solution. The answer is we're pretty much at the trough, right? The Bank of Canada said that they think the peak impact, global impact of the pandemic was in April, and I tend to agree. I'm just not sure if the economy in Canada grew in May, or whether it's going to post the first month of growth in June.
Pierre, question for you on kind of messiness of recovery. It's around borders. So at the best of times, geopolitics and trade is a bit of a complicated thing. It's probably further complicated now with closed borders, and some which will reopen and some which won't, or you've got this sort of semi-porous now border between Canada and the US, right, where it's kind of open and it's kind of not. How does that affect how you think about trade and geopolitics?
Oh, fundamental. I mean, however, I do believe that it will, I mean, it is sort of quite close now, but it will not be able to last very long. They will find ways to reopen the border in a sanitary way. It will not be business as usual, but it is clear that the borders will be, between Canada and the US, will be reopened relatively. As a matter of fact, it's more on the Canadian side at this time. We don't want it to open for all kinds of reasons. So the United States, I think, want to re-engage faster than we do. We are still a bit more nervous on our side, but my view is that in the course of the summer, with the sanitary precautions taken around truck drivers and this and that, you will have a more open borders, maybe not for tourism, but certainly for anything related to business. And the US and the, as I say, we have the United States, Canada, United States, Mexico agreement that is very helpful, and that has also been supported by the Democrats. So whatever happened in the fall, we're okay on that front.
So excellent, right? An excellent entree into this. We will ask this question carefully that came in, which is, do you see the decline in multilateralism persisting or not persisting, depending on what happens in the US election in the fall?
Well, listen, I think I was very perturbed and frustrated to see that the first presidential ad campaigns by Joe Biden was saying that Trump was not tough enough on the Chinese and that he should be even more aggressive. I thought the Democrats were falling into the trap Trump put for them, and accepting his finger pointing on the COVID thing. I think that the Democrats, first of all, the whole WTO thing around multilateralism, Obama had stopped appointing judges to the appellate body. And Trump, of course, continued in the line, but Obama had already started that. My view is that the tone would be different. I think that the Biden administration would probably have more respectful vocabulary and words treating these institutions. I think they would be far nicer to the allies. I mean, Merkel and the Prime Minister of Canada and the Prime Minister of President of France would not be insulted regularly as Trump does. So I think the mannerism would be a lot more polite and nice. But on the substance of things, I think a Biden administration would be essentially, while changing the tone, would maintain fundamentally a same questioning and challenging of multilateralism, and would probably be extremely focused on domestic affairs in the US. I think a Biden administration would be on healthcare, climate change, education, all the things that we see inequality exploding due to the COVID and the violence with the murder of George Floyd. I think a Biden administration would not spend much time on the international scene.
Lots of questions here on the stock market. We're careful here at the school to remind, right? We may remind our students and our exec ed participants that the stock market is not the economy, right? It's it's to some extent a gauge of consumer and business sentiment. It's a predictor in a way of what economic, sort of activity will look like. But then again, I mean, it's not hard to understand why so many folks are looking at the market saying this doesn't make a lot of sense to me. Craig, do you want to comment on that?
Sure, I get that a lot, and let me put the qualifier out that if I actually knew what the stock market was going to do, I wouldn't be speaking to you. Right? It's one of those yacht questions. If I knew the answer to that, I'd be on my yacht, right? So, with that caveat, I think the thing I'd stress is the stock market is forward-looking, and so if we actually look at the plunge in the market, it was taking place before the economic lockdown in Canada, the United States took place, right? So, if we just think about the North American stock market, the plunge came before the lockdown. The market was still falling as governments were announcing more and more programs, but eventually the sentiment turned, right? And it's, the market is basically the fight between the bulls and the bears. And eventually the magnitude of the policy response was so great that you had investors suddenly say, you know what, maybe we've gone too far. And the market has rebounded enormously. I would say that my own personal opinion, remember that caveat at the start though, but my personal opinion is, I would say the market is pretty much priced for the perfect recovery right now, right? They're basically, I don't think the market fully appreciates how difficult this reopening could be. And I think inevitably we are going to see the health numbers deteriorate as we reopen. It's important to remember that the reopening is less about the economy. It's really about the health risks. And the key thing that the reopening is to do is to prevent the healthcare system from being overwhelmed. That's the actual reason you're reopening and reopening gradually. You're going to have more cases, but you don't want to overwhelm your health system. So, I think that, as we reopen, we're going to see some additional health risks. I think at some point there will be concerns about a second wave, regardless of whether one hits or not. And, I would say that the market tends to be 2 steps forward, 1 step back. And what's really happened is the market ran backwards a long way and then ran forwards a long way. So, I suspect we're going to get more volatility in the months to come. I think it's going to take considerable time for us to reach the pre-COVID levels, even though the market's rebounded so strongly. I expect there to be significant volatility, but that's my 2 cents. It is a good leading indicator, right? So one of the things I would share with everybody is because of the high degree of uncertainty and because economic data is so lagged, we launched a Deloitte economic recovery dashboard. It's up on the Deloitte external website, so it's publicly available. What it has is it has global health statistics, so you can monitor and track what's happening globally to the health numbers, because this is a health crisis. It has the key leading economic and financial variables that includes the stock market, but also includes a lot of forward-looking economic indicators. And then because StatsCan data is so lagged, official data so lagged, we use a lot of non-traditional metrics of activity. So foot traffic in retail, number of cars in parking lots, the volume of cars on highways and the like, so that we can measure the aggregate amount of activity. And what we're trying to monitor is, as we reopen, how close to back to normal do we get? And so if for anybody who's interested in following the evolution of the recovery, I'd encourage you to take a look at our dashboard.
Let's do one more question before we wrap it up here. To you, a fair number of questions in the Q&A and the chat about China. Is this a reliable trade partner? They have a predilection toward tariffs. They're playing some games, sort of right now politically. What's your view on kind of China's role in all of this?
Well, I mean, which country is not playing games? I mean, we have for 50 years working very hard, the whole international community, to integrate China in the international order. We got them in the United Nations, members of the WTO, the International Monetary Fund. from supporters of terrorism around the world under Mao, they are now the second best contributor to the peacekeeping system of the United Nations. I mean, when I see the demonization of China at this time, I say to myself, oh my God, did we think that they would become all nice liberals and practice the game exactly the way we do? I think the Trump administration got it very wrong not to build a coalition of countries with the European Union, with Japan, with Canada, and build at the WTO a coalition of like-minded countries to influence China and making sure that it contributes to the kind of globalization we believe in. But you can't blame the Chinese for playing their hand as strong as they can. I have major reservations about President Xi. He is an autocrat. He is more nationalistic, but he reflects the rest of the planet. I mean, Modi is more nationalistic in India than we've seen in a very long time. Trump is America first, and you see it all over Eastern Europe. So I think China is a country that we need to understand. They represented 1% of the world GDP under Deng Xiaoping. They're now at 15, 16% of the GDP. We have to understand that they will want to tilt the institution towards their interest. Now, we should do it in a wise way, and we should not give them everything they want, but just demonizing them is going to be very harmful, in my view, to the world economy.
Thank you. We're just a tremendous job by both of you. Thank you so much. We're up against it on time. If I read the chat right here, you've got both of you have lots of new fans, and you're going to get lots of nice letters, which is which is great. You know, Craig, you mentioned that dashboard and you know, some of the other resources that Deloitte's got available. You know, we want to make sure that we share them with the audience. So for anybody out there, if you are interested in accessing the Deloitte tools, you can literally open the camera on your smartphone and you know, frame in the QR code, and then that'll take you to a link to the various resources. We'll just leave that on screen for a minute. This is also being this whole webcast is being recorded, and at some point will be up on our YouTube channel. So you can always come back to this part of the recording too, if you want to be able to get to the resources. So you know, again, just really wanted to say thank you so much to Pierre and to Craig. We've touched on a lot of these, you know, themes over the last 12 or so weeks, but not to this level of depth. And I thought your comments were just tremendous. I don't know if you have any final words, or if you would like to sign off.
My final thing is, you know, our dashboard is all the data, but if you want the analysis and to track, you know, our thinking around the economy, I do a daily commentary that complements our dashboard. So, you know, the firm has allowed me during the crisis to make this like a public commentary. So if you follow me on LinkedIn, you can get the economic commentary, and, you know, we will talk about all of the things that, you know, are coming up in the Q&A, including the outlook for construction. So
great. Pierre, final word.
No, thank you. Thank you very much. Nice meeting you all today.
All right. Well, then, for our audience, for everyone who tuned in, you know, again this week, and if you're new to it, then thank you very much, and we'll see you next time next week. Cheers.
Thank you.
Bye.